Mic check one, mic check two. There we go. Good morning. Happy Monday. I hope you guys had a great Mother's Day. Hope you had a great weekend. We are back, and I am Grady on the charts. Thank you for joining us once again. Please like and subscribe. Hopefully, we'll have a good day today. Good morning. Happy Monday. All right, audio is working. There we go. Let's go ahead and get loosened up verbally. I got a bit of a difficult one this morning. Betty Botter bought some butter, but she said the butter's bitter. If I put it in my batter, it will make my batter bitter. But a bit of better butter will make my batter better. So better butter, better butter. Okay. All right. Well, there's that then. All right. The market is doing some weird stuff this morning on tariff news. Also over the weekend, the Chinese tariffs were rolled back to a lower level. So the market has had a rally over the pre-market. We gapped up from Friday's close to the Asian Open on yesterday last night. And as the market continued to rally into the London session, we find ourselves with a decent high. And on the news front, aside from this unscheduled tariff news, we don't have anything for the U.S. What we have is some Australian news, and then tomorrow we'll have core inflation and the inflation rate month over month. Okay, so on the pre-market news, I'm probably front running this a little bit more aggressively than I should, but pre-market in the pre-market, I am in a short. And I got into the short just here. So here we have London session high. We went into a gap in the higher time frame on to the left. This is around the first tariff news. And so we've rallied back into this range. So we rallied back into this range. And I was just looking at this imbalance that we had. There's a small little green line right here. I'm gonna plump it up just a little bit. And I was just using that level. So I got short there with an imbalance on the higher time frame, and then we drop blah 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 blah. And so we dropped back below the London session high. And as we came back below London session high, um, as we went back and forth across these levels, we created this imbalance here. It's a SIBI. When we traded up into that SIBI, we got short. We dropped down below all of the range that we had created. Once we dropped into the look. It's Monday. It's Monday. Come on, come on, come on. It's Monday. All right. And I believe I'm about to get stopped out in the next 3 minutes here as the market opens and that opening range volatility flashes us back and forth. So I could see me getting stopped out here, which is basically like a break even day. I wouldn't think I would be down that much. But as the market would open in the next 3 minutes, if we don't drop down below all of this and to give us that range to trade back and forth, then it's going to end up stopping me out in the next 2 or 3 minutes as we run up above the high of this candle. Am I bearish or bullish at this point? At this point, I'm not really quite sure. I see that we've gone above London session high and we failed here and we failed here and then we've come back into this range. But at the same time, we could use London as a premium flip discount, right? And so this would just become a discount level. And then every time we drop down into premium of London, it just becomes our discount range. So that could send us much higher for the New York sessions price range. One of the things that I was anticipating prior to the opening of the market is that if there were to be any sort of pullback, that we would experience that pullback just prior to the opening of the New York session. So I don't know how many times you've been in a trade where you're expecting the New York session to offer maybe a retracement, and you're saying, "Oh yeah, I could see it, right? I see the gaps. I see as soon as the market opens, we would have these retracements, and the price would drop back into the range and everything would be cool, right? But then just prior to the market open, the market does the move that you were expecting to see, and then it kind of just leaves you, looking for um looking for that entry again. And you're sitting there saying to yourself, man, I was waiting for the market to open before I took that entry. Now, this is I'm in an extremely tight range right here. And the market is gonna open in about 20 seconds. And we're really, really tight on that area. And then the market just begins to slide back to the downside just prior to the market open. But I don't anticipate that to be any sort of um signal about the direction of the market. I just think that this is just some of that volatility entering the market just prior to the open. See? And then as we drop down here, normally everybody would be, fist pumping, woo, woo, woo. There's no need for fist pumping because just as we drop down that low, immediately off the open, we can turn around and go, skyward just as quickly, just as quickly. So off the open, I'm just going to move my stop loss down just a little bit. I know open range volatility should not allow me to do that. I just wanted to lock a little bit in, just lock a little bit in here because I've been holding on to this trade for just a little bit, and I'm going to move this take profit down just a little bit because of how aggressively we are moving to the downside. This is that's the first candle of the day. Okay. So now I'm moving my stop loss to here, and let's see if it takes me out. And almost, almost, and that's it. It stops me out. Oh, I was holding that for about an hour. Let's see, we are up $2,000 and it seems like that was a very fast trade, and it seems like that yeah, it seems like I made $2,000 in about 3 minutes, in about 38 seconds. And I've been holding that trade for about 30 minutes now. So that's going to be the stream for the day. Um, thank you guys for joining me. Like and subscribe, and we'll see you guys tomorrow. Have a good day. Bye bye.